but we'll go ahead with a little bit of review. So remember how last week we talked about moving averages, right? It kind of just takes the price and smooths it out to one line. There's something called the weighted moving average or exponential moving average and the simple moving average. So the weighted moving averages take the more recent prices into account, so it follows the price more closely. We didn't really talk about the application of these two moving averages, but today we'll be talking about that in an indicator called the moving average convergence divergence, short MACD. Similar to the RSI, it's a momentum indicator, and this indicator has 4 parts. So you got the 12-period EMA, which takes into account 12 candles, 26-period, which takes into account 26 candles, as well as the histogram, which is these bars down here, and then the 0 line. You can see in that graph, it's the black line in the center. So it doesn't really make sense right now, but if we look at this slide, there's 3 steps or 3 things you can see in the MACD indicator. So you got, first of all, if your two moving averages, the 12 EMA and the 26 EMA are above the 0 line, the 0 line is that line in the middle. It just means that price is bullish. It's expected to go up. These moving averages are under the 0 line, like shown on the left side of the graph. Price is expected to go down. So, second thing, when the two moving averages cross each other, it shows reversal signals, right? So let's say the shorter moving average crossed the downside of the longer one, which is the signal line. That just means price has a tendency to decrease. If it crosses to the upside, such as here, then price is expected to increase. And it just shows reversals. So what does that really mean when it crosses, right? Let's say price was moving like diagonally like that, right? The longer moving average would just be flat because it takes into more bars into account. It doesn't follow the price as closely. Shorter moving average would look something more similar to this, the price, right? So you can see the crossovers, let's say across the upside, right? The shorter moving average crossed the upside, price expected to increase. And then across to the downside, price is expected to decrease. Does anyone have any questions regarding the moving averages? No, okay. So that was the second step, or second piece of the MACD indicator. The third piece, histogram. The bars in the middle, it shows the distance between the shorter EMA, the 12 EMA, and the 26 EMA, also called the signal line. Further apart, more momentum, and then if they're closer together, price has less momentum. This could be to the upside or the downside. So if you take a look like right here where this histogram is large, the moving averages are really far apart. Shows price has momentum. This is above the 0 line, upwards momentum, okay? And then you can apply that to down here as well. This is downward momentum. And then like right here, histogram is really small. Price has no momentum, and it's pretty indecisive. One thing to know about the MACD indicator, it's a lagging indicator because remember we learned last week, the moving averages take into account past prices. So it's always going to be one step behind. It shows the instantaneous momentum from past prices, and it doesn't accurately predict future trends. It doesn't always accurately, sometimes it may. So that's why you don't really rely on one indicator individually. You would combine it with candles and price and volume. So here's an example of the MACD indicator, right? So we got a bearish crossover right here where it crossed to the downside. You can see that reflected with the price decrease. Here you got the bullish crossover to the upside. Price subsequently increases as well. Same thing right here, and then on the right side as well. Does anyone have any questions regarding this graph? Okay, we'll move on. And then this is like another example. So on this, you have really 4 buy and sell signals. They're labeled, I put dotted pink lines over them. So first one, you see the two moving averages cross, right? The shorter one crosses to the downside. This will be your first signal to sell short on this stock and profit when it drops. Second signal, moving averages cross under the 0 line, right? This is your second signal to short. If you didn't short up here, you would have shorted right here, made some money. Third one, you see the dotted line, shorter moving average crosses to the upside, and you see the subsequent price increase. See the last dotted line? The moving averages crosses above the zero line, showing a bullish direction, and you see the price increases after that as well. So, wait. Okay, do we have any questions regarding the MACD indicator? No, okay. Next up, we'll be talking about like indicator divergence. This is like more advanced as I said earlier, so it's okay if you don't really understand it. It takes some time and experience. So like divergence, what this means is like price and the indicators moving in opposite directions. If anyone's taking physics, like you see converging lenses and diverging lenses. Converging is like they're coming together, diverging, they're coming apart, right? So divergence is where price and the momentum indicator moves in opposite directions. You can see in that chart they're diverging. So how is this useful, right? So if we have like a chart of the price kind of like this, right? Can't really see anything just from the price. But if you put an indicator on top of that, it could show the momentum a lot better. So indicator divergence is kind of just when momentum is slowing down. So for example, when the RSI prints lower, remember how RSI was measuring the speed and magnitude of the price movements. If it's printing lower or like staying flat, it just means price is not rising as much as fast. The MACD indicator that we just realized, that we just went over, when it's flat, the moving averages, it means that the price is kind of moving flat, and then the histogram means the distance between the two moving averages is dropping, right? Because the short moving averages follow the price a lot closer, longer one kind of stays more flat. So if they're coming together, kind of just means that in the short term, the price is staying flat as well. So with indicator divergence, there's something called positive divergence and negative divergence, right? We'll start off with negative divergence, where in negative divergence, top row is the price. Price is moving up, right? In this case, I'll use the RSI as an example. This is the RSI upper bounds, lower bounds. Negative divergence is where price is moving up, but indicators start to move down, okay? Remember how the RSI showed momentum? It just kind of means that price is moving up, but the momentum is slowing down. You would expect the price to soon drop. Positive divergence, where the price is the reverse of negative divergence. Price moves down, right? But the RSI or momentum indicator starts moving up. I mean, you could call this like convergence, but nobody uses that term. It's just positive divergence or negative divergence. So in positive divergence, it's positive. Typically a good sign. Price is dropping, but the momentum is coming up. It means that like in the near future, the price is expected to increase. Negative divergence is the opposite, where the price is coming up, but the momentum is heading downwards. Just means that in the near future, the price is expected to decrease. So in this one, how we use the RSI indicator on the last slide, but this one we'll look at the histogram for the MACD indicator. So if you see the price dropping, right, this is a clear downtrend, lower highs, lower lows. And then you see the histogram making higher lows. You're kind of like, so the momentum is heading up, but the price is heading down. In the near future, you can expect the price to start following the momentum and then start rising. Does anyone have any questions regarding this? Okay, so let's take a look at this slide, right? You got price up here. It's kind of moving up, kind of moving down. Overall picture is flat. It's kind of hard to see, yeah. But you see the RSI indicator, it's a clear downtrend, right? Momentum is slowing down because the RSI measures the speed and magnitude of the price movements. You see the MACD indicator also moving down. Averages out the price. Momentum's heading to the downside, but price is staying flat. Could anyone tell me what you're expecting the price to do in the near future?
Drop.
Yes, you're expecting the price to drop, and then that's pretty much what happened, right? Price is flat up here, momentum is heading down, and then you see on the right side of this graph, the price starts dropping. And then on this chart, And then this was a negative divergence, where the indicator is dropping, but the price is rising or staying flat. If we take a look at the right side, there's a positive divergence, where the price is heading down, clear downtrend, right? But then these two indicators are both heading in the upwards direction. So with that positive divergence, you can expect that the price is expected to rise in the near future. Just because the momentum is heading up, but the price is still staying, eventually the price will match with the momentum, having the price rise. Do we have any questions? I know it's kind of complex, but I think you guys understood it.